So Larry has been doing a ton of work around the Tesla story for a really long time. One of the prime voices, one of the best voices when it comes to understanding how the company operates from a financial perspective, from an operational perspective. And the latest stuff that Larry's working on here has something to do that I really think this is something that people really, it's not talked about at all. And it's one of those like hidden gems around the Tesla story that can make a gigantic impact in the long term. And then when we look at the data that Larry's about to show us here, it's like it really shows you just how well positioned Tesla is as a company. So, Larry, I'm going to hand it over to you. You walk us through the work you've done, and I will, pepper you with questions or interject wherever necessary. So, I'll give you the floor, my friend. Go for it, Larry.
Thank you. So let me start by saying I started this warranty work 2019 because, I had one of these bears, one of these Tesla bears, or what do we call them? Tesla
Q.
Tesla Q guys. Brad Munchen, I think it was, tweet out how bad Tesla's warranty, that Tesla was going to go bankrupt from how bad their build quality was. This was very early days, I think it was, his work was based on 2018 experience, and he was saying that the warranty reserve was not sufficient because all the cars were breaking down and Tesla was fixing them, and they weren't putting it under warranty. They were saying it was goodwill. And that's proof that their warranty reserve wasn't enough. So it was, when you take the whole explanation, didn't make any sense from an accounting point of view or from any point of view, really.
There was a narrative that he was trying to back up with data that didn't exist.
Actually, not just him, just a whole bunch of people had this narrative.
That whole crew.
And so, but it got me interested. Are they putting aside enough money in the warranty? And how bad are their warranty claims? And, is this an indication that Tesla's financials are not really good? So I've done a lot of forensic examinations. I'm not a forensic accountant, but I've had forensic accountants do forensic accounting for me. I can read a set of books, not a great accountant, but I can read a set of books. So I set myself the task of reading up their warranty business and seeing, as a business person, would I buy into this company given its warranty reserves? So this is my 5th year in accounting it. And so I want to share with you the numbers that I got. Does that sound good?
Let's do it. I can't wait. I love, and before we even get started, I love that your fun task, just like mine, is being a gigantic nerd. Isn't that the best?
Yeah. I mean, this is something I know a little bit about. And let's stress the word little. I'm not an accountant, and I've often got it wrong, but I in looking at the numbers, I can find the numbers that, I'm concerned about, and then I'll always ask the accountant, is this real? Is this not real?
And Larry's underselling himself. He's always directionally correct. So go ahead, go for it.
Not always, actually, to be honest with you.
Let me give you some compliments, Larry. Come on.
I'll show you the numbers. I'll go through this very quickly because I have graphs of all these numbers, but I want to show you how I got the graphs so that you understand it. So this first line here, so these are the years from 2018. I think that was the first year that they made these outlandish claims. And we end in 2024 because the historic warranty information we have about all the competitors to Tesla end in 2024. By the way, shout out to Warranty Week. Warranty Week is an online publication. You can look it up at warrantyweek.com. They publish all these numbers. All the numbers you're going to see, other than this chart, come from Warranty Week. And that is all the competitors to Tesla, both in the US and globally. Warranty Week compile their information and publish them in graphs and in tables. This table is my own, but it's taken from all of Tesla's annual reports. Okay?
Perfect.
So this first line is the number of cars they sold in that period. So 2018, they sold 246,000, 2019, 360,000, all the way up to 2024 when they sold 1,789,000 cars. But the total of cars that are under warranty, it's a rough number because I'm taking the last 4 years of sales on the basis that the warranty expires after 4 years. There are some pieces that go on longer and some pieces are short, but I've taken a sort of an industry standard of 4 years. And these are the number of cars that if you accumulate them for the previous 4 years are still under warranty. Make
And it's kind
sense?
of like a loose proxy for their fleet size, but not really because they're going to have older cars that are out of warranty. So you're trying to capture the ones that are on the road everywhere right now that would be under some sort of warranty.
Yeah, there are about 1 million cars. See, I've got just 6,158,000 at the end of 2024.
Yeah.
There are about 1 million cars that are already out of warranty. And that accords because Elon told us last night that there are 7 million, that they've done 7 million cars. So it's about right. It's approximately
About 85% of the fleet is under warranty right now, something like that.
Yeah, so it's the last 4 years of production. So if they expand, say, production, he's talking about in 2026, a huge spurt in production. At that point, it'll be a higher percentage that'll be under warranty. But it's only when you get those huge spurts that you get the higher percentage.
Yep.
So if you go back to like 2020 and 2021's higher percentage. But, these are margins. These are marginal issues. So now I go to the Tesla financials, the 10Ks, and I look at the provision in the balance sheet. That is the amount of dollars they've set aside and said, this money is not going to go into profits. This is profits we've made, but we're not going to put it into profits. We're going to set it aside to cover warranty. And so that's actually not an asset in the balance sheet, it's a liability, and it rises from $544 million in 2018 to $2.7 billion in 2024 from the revenue they've earned in that year.
Yeah.
And then from the revenues they earn in that year. And then the next line is the actual cost of the warranty, the money that they've paid out to repair those cars in that year. And so you'll see, say, in 2024, they paid out $1,453,000.
And real quick question there, Larry, just so the audience is fully aligned. Does that 1.4 billion in 2024 include what would be called goodwill or things that they've done?
No, I'm gonna come to the goodwill. It's a separate line item, and it's part of their total cost of services in general. It falls into total cost of services. So that's the first joke on Tesla Q. They said, they're not really accounting for their warranty, they're doing it in goodwill. Yeah, but if they do it in goodwill, it still comes out of their profits. It comes directly out of the profits. It doesn't even come out of the reserve.
And last time I checked, the service,
it's worse for Tesla to take it out of their service because it's over and above their warranty reserve. It's so funny that they didn't figure that one out.
And the service line item, I believe, right now is profitable.
Well, I'm going to point to that. I'm going to.
Oh,
show
sorry,
you
I'm spoiling it. Sorry, go.
Yeah. No. It's a point that kind of escaped them entirely.
Yeah.
Let's say they're not very good accountants. Anyway.
Yeah.
The point is that $1.4 billion in 2024 came out of this year's warranty reserve.
Yeah.
But if you look at the total warranty reserve, so here it is, the accrued warranty provision. What is the accrued warranty provision? It is the difference between the provision made that year and the amount spent on warranty that year that falls into the fund, and it accumulates over time,
Yeah.
which makes sense because there are 7 million cars for which there's still another 3 years, and some cars that are sold in, say, December that year, 4 years of
Yeah.
warranty to be paid.
Got it.
But
And just another way of looking at it is if for whatever reason Tesla set aside the exact dollars that they thought they would spend in warranty, and they ended up spending those dollars every year, that accrued warranty provision would be zero. But because they were, go ahead.
yeah, except that they continue selling cars and continue making provision against those cars. So
There you go.
it's a rolling amount.
Yeah, yeah. But the end story here is that they are spending less in warranty repairs than they budgeted for. That's the
That's right.
overarching premise.
That's right. That's the overarching point. And you'll see, I actually do this, that the provision constantly is increasing at a rate higher than the cost of repairs are increasing.
Yep.
And so the reserve is growing.
Yep.
In fact, if you look at the provision per vehicle, that is if you take the total amount of vehicles that they've got, put it that, and divide the provision by that, this is the figure, provision per vehicle. The amount of cars they have under provision, under warranty, divided into the amount of money they have. This is the provision per vehicle.
Yep.
And if you go, that's $1,573. And if you go to 2024, it remains about $1,000 per vehicle, and they're spending $236 a vehicle.
Right. So at the car level, each car that they sell, they're basically saying we're going to set aside $1,100 as of 2024, and then during the warranty period for that vehicle, they only end up spending $236. So another way of conceptualize is like, hey, we think the 4 pieces of trim and the steering wheel are going to break, but it turns out only one piece of trim ends up breaking. And
you're close, but no cigar.
Okay, thanks.
Because the 1,091 provision for vehicle is how much we've got in the fund. The 236 for all the vehicles, how much we've got in the fund. Some vehicles have got 4 years of warranty to go, and some have got like 1 month of provision to go.
Got it.
But the 236 is how much we spent per vehicle through the whole year. Each vehicle spent 236.
Got it.
So if every vehicle had 4 years to run in the fund, it's gonna eat up most of that 1,061, because 4 times 236 is almost $1,000. But the average number of vehicles, the average is less than 2 years of vehicles out there, right?
Got it.
Or about to, and the provision, therefore, we've over provided probably 2 to 1.
Got it. That makes sense.
And the graphs will make that a little bit clearer. And what's really interesting is, what is the industry standard? What is the standard across the industry of how much your revenue reserve is?
Yeah.
Now you raise the problem of services and this funny idea, Tesla Q. Tesla Q have got terrible accounting skills. So if we look at the P&L for the services, you'll see that the revenue for services has risen from $1.4 billion back in 2018 all the way up to $10.5 billion by 2024.
Yeah.
Cost of sales have, however, not risen as fast as revenue has risen. So back in 2018, we were losing money in services, and we lost in 2019 as well. But in 2020, we started reducing that loss, and by 2022, a miracle of miracles, we started making a small amount of money on our services, and it rose again in 2023, and it rose again in 2024.
And just to make it clear that it's services and other. So it's services plus merch plus
Charging,
whatever. Charging.
charging
Yeah.
network, services on cars, and services on batteries, on
Yep.
mega packs, on all of on everything.
Maintenance of the fleet. That's really what it comes down to.
Maintenance of
Maintenance
the
of the
fleet
fleet.
and the distribution centers, the maintenance on the actual. So, bottom line is all the expenses relating to maintaining those goods that we sold and the services we provide for them that we don't get paid for,
Yeah.
that we get paid for. Sorry.
Yep.
So the bottom line is that if the cars were being fixed for goodwill, that money would fall into services. And given the growth of the fleet, if the goodwill was going out with the size of the fleet, we would expect to see this profit reduce, not increase.
Yeah.
And yet we see that year after year after year, with the sole exception, I think, of this year, that margin has increased, and not by a little, by a lot. It went from a 26% loss to a 19% loss to a 13% loss to a 2% loss to almost a 3.5% profit to a 6.25% profit. It lagged this year by 5.62, and I think that was the introduction of the Cybertruck.
Yeah.
And we'll see it go back up and improve. So,
and real quick, and just the mechanics of what goodwill would entail, right? So what would happen is, and again, this is for people that are not accountants or finance nerds or number nerds, so to try and help you sort of come along with us a little bit here. So it basically means that goodwill would cost Tesla $500. Let's say, oh my God, my steering wheel broke. I need a new steering wheel. And Tesla's like, you know what? There's whatever. We don't want to put it under warranty. We want to do a goodwill, right? What would happen is they would literally eat the cost of $500, and then they would sell it to you at zero. So that the revenue line item would get a $0, and then that the Tesla would incur $500. And so I would actually tell me if this is a good modification to what you just said. If Tesla's fleet was increasing and they were hammering goodwill, what would actually happen is the losses would get bigger. They wouldn't even get to profitability. Like they would go from negative 26% gross profit to like negative 50% if this was actually true. But the exact opposite has happened.
That's exactly true. And the reality is that what happens is that when a car comes in for service, and it's a good customer, and it's a Tesla car, you want to be good to them. And there's a question about, well, it's not really covered under warranty, but you know what? We'll fix it for you.
Yeah.
That is always, coded as goodwill.
Yeah.
Because you need to know from your manufacturing and your product design and your, buying from your supply chain, you need to know whether that part or that component or that substructure is doing well or not doing well.
Right.
So you want to code it correctly from a warranty point of view versus a goodwill point of view. The goodwill point of view is, you know what? This is not repaired under warranty. This is you drove on the curb.
Yeah, 100%.
But we're going to fix it for you. You don't want to ding the manufacturer, the factory or the supplier for it.
Yeah,
and so that's how it goes. I mean, I've had a goodwill repair done to my truck. I drove the truck off the side of the road. It took off some of the plastic, on the fender.
Yeah.
The guy fixed it for me. He said, we'll take care of it.
Yeah.
I'm certain that was coded to goodwill. You know,
I had something similar happen to me with a tire sensor. The guy came out, and it turns out that it popped out. They just had to put it back in, and then they're like, it's we already came here for like, to, I think they fixed something else. My 12-volt battery died, and then they came to replace the 12-volt battery, and I'm like, the sensor's messed up. Like, it's fine. It's like $12. Who cares?
Yep. There you go.
Yeah.
All right.
And so
So
and then real quick, a quick summary of this, like my takeaway, and then I think the graphs will really show this.
yes.
The overarching premises, or no, the overarching premise from people that have followed the company that say Teslas are unreliable and Tesla's going to be in a really bad situation because they're unreliable. That data says the exact opposite. It's actually saying that even though the company's taking steps to set aside money for warranty repairs for these batteries that always break and blah blah blah,
Oh,
the
yeah.
exact opposite is true. It actually turns out that these cars are actually quite reliable, and when you go through your charts and you compare it to other manufacturers, you'll see just how true this actually is.
Well, let me ask you this question: do you rate Toyota as reliable?
Yeah, Toyota's reliable.
Do you rate Mercedes as reliable?
I wouldn't say Mercedes is reliable.
You wouldn't say Mercedes, but you would say Toyota
Absolutely.
and Honda.
Yes.
So, if I were to say to you that the I want to put this correctly, the history, the warranty history of Tesla is aligned almost exactly with Toyota and Honda, would you say Tesla's
I would
reliable?
say, because I'm very familiar with the company, I would say, yeah, I know that because they have a lot less moving parts and they would be up there with your Hondas and Toyotas who have perfected internal combustion engine manufacturing. I would say absolutely. I'm not surprised. I don't think most people know that. And I think this is
Right,
where this data is such an eye opening exercise.
right. So let's. Oh, by the way, I've just got some revenue numbers and warranty claim numbers just for Ford and GM because they're US OEMs.
Yeah.
And so we've got revenue for autos about in the billions. You see Tesla's a mere 77 billion last year. General Motors is 100 billion more. Ford was almost 100 billion more, 172 billion versus 168. Cars sold in the prior 4 years, 4.54 million Tesla, 25.47 million for GM,
Good for
and
them.
16 million for 160. But look at the difference: 77 million on 4 million cars, 172 for 25 million cars. Kind of tells you something is off, right?
Yeah.
So if you look at the warranty accrual rate of all of these OEMs, Tesla accruing 3.31 of their sales to warranty. So 3.3% of every sale gets put away into this warranty fund. GM 2.69, Ford 3.76. So Tesla's somewhat in between the two, right? Fair
Yeah.
enough.
Fair enough.
Now let's look at the actual claims. Tesla 1.8, GM 2.6, Ford 3.5. So
Yeah.
Tesla is, 30% lower than GM and half of Ford's.
Yeah.
But
Yep.
then let's look at the accrual rate versus the claims rate. Tesla's accruing more than GM, and the claims are much less than GM or Ford. It's accruing the most, or not quite the most, about
Relative to their fleet.
yeah, a little
Yeah.
bit less than Ford, a lot more than GM, but their warranty claims rate are much lower than GM's and half of Ford's, almost half of Ford's.
Yeah.
And the accrual claims rate, therefore, is 183% versus 103% for GM and 107% for. What this is saying is GM just accrues enough money to cover its claims on an annual basis. Ford just accrues enough money to cover its claims on an annual basis, 7% more. Tesla is accruing almost double the amount it needs to.
Yeah, yeah, and so the overarching story there is, you tell me if I'm thinking about this incorrectly. GM and Ford have been around in the game for so long, and they understand ICE stuff so well that they know exactly how much they have to put aside. But the problem is that if you look at Ford and GM's balance sheet, they have to do this because they are very much burdened by debt. They have a dividend. They do buybacks from time to time. And so they have to be extremely, extremely careful with how they set aside the money for warranty. Whereas Tesla is like, we're going to do the right thing. We're going to set aside money. We're going to make sure we have our fleet taken care of. But it turns out that the actual performance of the vehicle from a reliability perspective and a warranty perspective is vastly outstripping or it's performing way better than what they expected the fleet would perform from that perspective. And so, if Tesla, like, let me put it another way, if Tesla did it the same way Ford and GM were setting aside money for warranties, Tesla would actually have a lot more cash available to deploy
A
because they
lot more,
wouldn't be setting aside for
not the
warranties.
cash, it's a lot more profit.
A lot more profit,
Tesla's profit would be much higher. The
much
cash,
higher.
yeah. So, in fact, here's the number. If you look at Tesla, it's accrued 2.73 billion, and it's paid out 1.45. So the difference between it would have been able to declare $1.28 billion additional profitability.
Yeah.
GM just eked out sufficient warranty accrual to pay out its claims, and Ford was actually, it also accrued a little, just enough. So, in other words, what we can say is Tesla's profit is functionally 1.28 billion understated for the last 4 years. That's a lot of money.
It is a lot of money. And if you think about the amount of revenue they did in 2024, that's roughly what is 1.2% of net income. So they would have added another 1.2% to net income, which is actually pretty significant. That's a lot of money.
1.2%, quite a lot more than 1.2%.
For in net income?
Yeah, because it's 1.28 billion, and their net income last year was.
Well, no, I'm at an additional 1.2%, 120 basis points.
Yeah. Right. You're right.
Yeah.
You're right. Okay,
this is where percentage and basis points comes in handy.
So now we can look at some of the graphs. And some of the graphs, so this graph is the same as the schedule that I showed you, but in essence, the orange line that you see there is the actual expense per vehicle. The blue line is the amount we set aside. Okay?
Got it.
See it? So you'll see every year from 2024 all the way from 2018 all the way to 2024, we always set aside. We always set aside. The provision was always very much larger than the actual amount we had to pay out.
Yeah.
And the proportion has actually been rising. I'll show you that in a minute.
Yeah.
So here it is. Here's your blue line and orange line. Remember, blue is the amount we put aside. Orange is the actual cost we incurred. And this line here shows you the excess that we built up into the fund.
So $6.7 billion what would have been claimed as profit since 2018, which would that kind of funds what, half of a Giga Texas or something, or a Giga Texas?
Well, the whole of Giga Texas, actually.
So we've basically set aside an entire Giga Texas in excess.
Yeah.
Which, and Giga Texas at scale in the next couple of years will do 1 million vehicles. So the company has set aside 1 million vehicles worth of yearly production.
Yeah.
Because their cars are too reliable.
Yeah. That's a great way of looking at it. 6.7 billion is a lot of money. All right.
I have a lot of things I could do with 6.7 billion.
Personally. So if we had been General Motors or if we had been Ford, we would have that amount of money in the bank.
Yeah.
The other thing is I've added service revenue to the service revenue and service profit. So this red here is the loss that services made and the profit that they're beginning to make. And this line is the margin, showing you the margin of profit that they're earning.
Yep.
And so what you're looking at, this is the zero line, and this is the plus profit, this is the loss. It just shows you that this margin has been increasing with the exception of this year. As I said, that may be the Cybertruck being ramping. and this is the cost of sales, and this is the profit, this is the revenue, and this is all of services profit. So I just threw that in because we had this conversation
Yeah.
about the profitability of services.
Beautiful.
Now I'm going to show you a comparison between US OEMs and Tesla, and we've really looked at those before, but my source of information is either the Tesla 10K or Warranty Week publication.
Yeah.
Here's Warranty Week's publication showing you for the last 5 years, GM's warranty claims rate, Ford's warranty claim rate, and Tesla's warranty claim rate.
As a percentage of product sales. So if I read this correctly, so let's say in the 2024 and on, Tesla set aside about 1.75%, call it, of
starting at about 1.75 and getting back to about that as well. Yeah.
Yeah. So for the year of 2024, if I just focus on 2024,
okay, there you
the
go.
last 4 quarters, yeah, about 1.75% of Tesla's sales is set aside for warranty. GM is somewhere around 2.5%, and Ford is somewhere around 3.5%. Okay, and I think this is where the reliability. I think of this as reliability. This is like a proxy for me for reliability. For every dollar that Ford sells, they have to set aside 3.5 cents
no, they pay out.
warranty.
Not what they set aside.
They actually pay out.
Yeah.
Thank you very much. Yeah. So on a per unit basis, Tesla is twice as good from a warranty perspective than Ford is, because they're paying out half of what Ford is from a warranty perspective in relation to their vehicle, each unit that they sell. Is that a fair?
It's absolutely fair. And I will say to you that there are several aspects to this. One important aspect is that Ford is paying out at a cost at their dealership repair cost, because the dealership actually does the warranty repair.
Got it.
In Tesla's case, Tesla does the warranty repair themselves. So it's not absolutely fair to say that that Ford is spending double the amount, but this is part of Tesla's business model. So there's a factor to be taken into account. You have to think of all of these things.
So let's think through that, though. So if that's that's Ford paying out the dealer's labor and the cost of the part. Okay.
Right.
All right. So Ford is burdening on the cost of a dealership network.
Yes, that is correct.
So that extra, let's say Ford would have been able to do it at the same rate as Tesla if they had their own network, right? Then Ford is essentially giving up almost 175, 200 basis points, so 2% in profit, essentially. They're giving it to the dealership.
No, that would be 50%. You're showing a 4% cost for them. Their cost would go down by probably almost 0.8%. So it would go down to 3.2.
No. So what I'm saying is the difference between Ford and Tesla, that gap, if Ford were to execute at the same as Tesla would if they had their own dealership network and their own service network and etc., that gap is how much the dealership is making.
Yeah.
On that warranty, because they have to pay for the labor, and I'm sure when the dealership bills for the warranty claim, they're not gonna do it for free.
No. They charge.
Right?
They charge.
They charge. So they have to. Ford is basically saying, here is profitability for you, dealership network. Thank you so much.
That's right. And I'm saying that. I'm saying that I think that would account for about somewhere between 25 and 33% of that total cost.
I got you.
The reduction.
Yeah.
So that's important, and that's just how much better the Tesla business model is.
I got you. Right. So I got you. That's the Tesla labor and the Tesla network inherently does it more efficiently, either because of the car or because of the fact that they own the labor.
That's right.
Got it.
Now, if you look at the accruals made, I'm not sure this telling us much. I think our slides earlier were better, but
I think the other ones were more descriptive.
Yeah. So this is the accruals made per quarter, but you can see that the amazing thing is Tesla sells so many fewer cars, and yet its accruals are getting up into the same range
by
as
far.
Ford and GM.
Yeah.
Now, this is the accrual rate as a percentage of product sales, and you'll see Tesla slightly below, but it's almost at the Ford accrual rate, even though their costs are so much lower. I
Yep.
think my graph showed that, not my graph, but my table showed that pretty clearly.
Yep.
And this is the reserves held per quarter, and you'll see the amount of reserves Tesla holds, the amount of reserves GM holds, and the amount of reserves Ford holds.
So this is the reserves that basically over that in the initial table we had down
That's
back to
right.
2016. This one's for 2020. So this is basically the actual dollars that are sitting in liabilities that are set aside for warranty claims. That
Sitting in,
that
yeah, in
go ahead.
assets. It's an
In
asset, not
assets.
a lot. Yeah, yeah.
In assets that if Tesla said was able to get much closer to a GM or Ford as a percentage of what they paid out, if they were able actually to do that, that pink would actually turn into a lot of that pink would turn into profit instead of it sitting just in assets.
That's right. That's right.
Got it.
That's right. So now I'm taking a step further. What I've shown is that not only does Tesla have a surfeit of reserve that could turn into profit in future years, that will turn into profit in future years, and not only do they outmatch GM and Ford in their repair costs, but now I'm going to take it one step further. I'm going to compare it to all automakers everywhere in the world. Okay?
Can't wait.
So here we are. Here is Tesla, orange line. Here is every other automaker that we've been able to accumulate data on in the world. Down here, and this is auto warranty claims rate. This is the actual claims rate that they made for the year. And here, these are all Chinese manufacturers. So I don't know how Warranty Week has the sort of disclaimer that says it's really impossible to tell how that works in their accounting and so on and so forth.
So like Li Auto, Great Wall, SAIC, Neo, GAC, these are all Chinese manufacturers. Mitsubishi is Japanese.
Yes.
Dongfeng, Mahindra.
Yeah,
Mahindra,
but
I believe, is
I will just
Indian.
say there's an asterisk about Mitsubishi.
Okay.
They've just had this terrible,
Yeah.
I don't know, apparently they've been messing with the
Fudging.
books. Yeah, they've been fudging it. And so they're in the midst of an insolvency circumstance because of their warranty. Anyway,
Got it.
so
But
so
but I guess what this says is if with the orange bar Tesla, we can see that their warranty claims rate as of 2023 is comparable to Honda.
right there with
Um,
Honda on the one hand and
yeah,
Volvo on the other hand. So
got it.
Honda, Tesla, Volvo. That's kind of
VinFast
the
is Volvo?
Volvo is right next to Tesla here. What isn't that? That's Volvo,
VinFast?
right?
VinFast?
Sorry, it's VinFast. I'm reading Volvo. I
Yeah,
don't know why. Renault Polestar is what I was
that's
looking.
Volvo.
But there's
Yeah,
Ferrari, Nissan, Ferrari, Honda, Tesla, VinFast, Renault, Polestar, BMW.
got it.
So they're kind of in this ballpark here
Okay. Sort
in
of
terms.
middle of the road,
Yeah, yeah,
next to Honda.
yeah,
I mean, as long as we believe that the Chinese numbers are accurate. But if you like, for
yeah,
example, Toyota, I see Toyota there is like 0.75 ish by Xpeng and
yeah.
Chang'an.
Toyota is
Yeah,
better than Tesla this year, but last year they were much closer. They were right with Tesla.
got it.
But you can trust the Toyota number. I'm not sure you can trust most of these
Which are the other ones?
much of the other ones.
Yeah.
BYD, I think, is relatively trustworthy.
Okay.
There's Nissan, Ferrari are right there, Honda's right there, and then Renault is a long established, and Polestar. So all of these guys are worse than So all of these guys are worse than Tesla, but not far out of the ballpark. Tesla's at 1.5, BMW's at 2.
And then VW and Ford are the worst.
Yeah, I mean, this is really bad.
Yeah.
This is really bad. They're at 3.5% and 4%.
Not good.
Stellantis is not great. Mercedes is not great. To your earlier point, GM is really almost double. So this is where it ends. This is where the good stuff ends, and this is where the bad stuff begins.
Yeah.
Actually, it may split quite where Tesla is, right?
Yeah. Tesla's like the definition of sort of like
Middle of the
middle
road.
of the road. Yeah.
Right.
Chugging along.
And this is the reserves. This is how much they're holding against their claims. So this is 100% line. So if you're on this line, you're only holding just enough money to pay your claims.
Got it.
If you're on this line, you're holding double the amount of money necessary to pay your claims.
Got it.
And if you're on and triple the amount, quadruple, and then you go up to 9 times the amount. So
fascinating. Toyota, one of the most reliable brands. What do you think that is? Why do you think they're going so hard? Is it just a very conservative mindset?
Profitable. They're so profitable. They're trying to reduce the amount of money they show to the government that they're profitable.
That's fun. I'm going to start taking out warranty. I'm kidding.
But Tesla's right there with Ferrari and Renault in terms of coverage, and then Volkswagen are showing good coverage, even though their claims rate are so high. They're covering it. Honda's a little bit below Tesla, but it's right there with Tesla. It's in that ballpark, and so
another middle of the road. Yeah.
Yep. And then you have BMW, Mercedes not looking that great, given that they're pretty high in the chart. And then, the laggards are like GM, Kia, and Ford.
Yeah. And my read of that, so the more to the right you go, the more it's like these guys are really cash poor.
It's not that they're cash poor. It's that they're not really sufficiently reserving. They're not reserving really the amount of money to be safe. The
reason why I think that it's because they're not generating enough profit to I guess cash poor is the wrong way of putting it. They don't have enough. They don't have an excess of profit that will allow them to be in a comfortable situation when it comes to warranty.
The way to think about it really is this: their profitability is at greater risk than the profitability of those that have these big reserves.
Got it.
Because if things don't go well that year, like the Bolt, when the Bolt has this massive problem, it hits their bottom line directly. Why? Because they're insufficiently reserved. Whereas if Tesla has a bad year, like the introduction of a whole new set of technologies like the Cybertruck, it's not going to touch the profitability.
Makes perfect sense.
Comes out of the reserves.
And that's what happened too with Ford. I think that one year where they had to recall their F-150s as well.
Yeah.
I believe the Lightnings.
Yeah.
I remember that because of battery.
It hits the whole bottom line direct. Yeah. And it happened with the Mustang once, and it happened with the electric Mustang, what do they call it, the Mach-E, and it happened with the Lightning. And it just immediately hits the bottom line. So that's the story.
So that is a story that is not told often. It's a story that is quite eye-opening, and I think it's it sort of fights and goes against the grain of I think years long misinformation, whatever fancy word you want to use. That said, hey, Teslas are unreliable, EVs are unreliable, Tesla's not doing enough to set aside money, they're going to go bankrupt because they're too unreliable, they're not profitable enough. And this data, I think, conclusively and ultimately and forever should put that to rest in multiple ways. And again, Larry and I are both investors in the company, so we're going to come from we're inherently biased, but we're looking at data. We're looking at data, and we're trying to be fair with the story. And I really think that even if you are a biased against Tesla, I think it's impossible to say now that Tesla makes an unreliable product and that they don't have enough in warranty or whatever. Like, they make a good car, and they're
By
well positioned as a company to take care of them. That's it.
by the way, Farzad, I didn't do this study because I'm a supporter of Tesla and wanted to show everybody how good Tesla was. I
Right.
did this study because I'm investing in Tesla, and I want to make sure that what Tesla's doing is what they say they're doing, and that
You got it.
they're capable. So I came from it. When I read the Tesla Q stuff, I had some concerns. I decided to test it. And by the way, I published this originally 5 years ago. Stopped all that chatter. They clammed up after this, but I've been continuously updating it, and publish it from time to time. There are at least 5 people who look at it. So
Yeah. At least 5 people. And I think that the fascinating thing about the time now is, with so much attention on the company,
yeah,
now, these things I'm sure will, come to bear again. Oh my God, look at
okay.
these unreliable POS. And Larry has done the work for all of us that shows, guys, it's only getting better. It's only getting better. So, and again, as a great investor does, you don't take anything the company says as gospel. You go in and you do your own research, which we obviously encourage everybody to do, always, regardless of what they do. So, any parting words, Larry? This was excellent.
No, I enjoy doing it, and
Yeah.
I do it for my own purposes. So if I can share it with people, I feel great
I
about
think
it.
many people will find it valuable.
Thanks for having me.
Of course. Make sure you go follow Larry at Tesla Larry on X, and make sure you check out his wonderful Maverick Mind podcast right here on the Farzad channel. The playlist should be right on the homepage of this channel. He just sat down with Kathy Wood and did just a fascinating, wonderful interview. Between the clip and the podcast we've put together, those two have gotten over 200,000 views already on YouTube, because Larry is the greatest podcaster in the world. Didn't you know? Go check it out. Bye, everybody.
Thank you. Take care.